Okay, hello everyone and welcome. It's Friday, April the 25th, 2025. This is the Finwell Daily Brief, episode 26.
Great to be here.
Let's kick things off with our financial fact of the day. And this one, well, it's pretty eye-opening.
Oh, yeah. What do we got today?
Get this. Only about 3.5% of Indians invest directly in the stock market.
Wow, 3.5%. That's surprisingly low, isn't it? Based on the SEBI report from last year.
Exactly. Last year's report, it just highlights this, well, huge potential for growth, right? So many people not yet participating.
Absolutely. It speaks volumes about financial inclusion, awareness.
Yeah.
There's a long runway there. It suggests, huge potential as things develop.
It really does. Okay, so let's shift gears to today's market close. This is as of 3:30 p.m. IST. It was a bit of a red day.
Yeah, it looked like some selling pressure came in. How did the main index fare?
The Nifty 50 closed at 24,004.45. That's down 242 points, about 1%.
Okay, a 1% drop. Not insignificant, but maybe not panic stations either.
Well, hold on, because the real story, I think, was in the broader market. Mid and small caps, they took a much bigger hit.
Ah, okay. That's often where you see more volatility. What were the numbers there?
Right. The Nifty Midcap 150, it tumbled to 19,653.85. That's down, wait for it, 2.68%.
Oof. Yeah, that's a sharper fall. And small caps. Similar story.
Pretty much. Nifty Small Cap 250 ended at 15,500.40, down 2.61%.
So a definite risk-off feel in the broader market then.
Exactly. And the Nifty Total Market Index reflects that too, down 1.72% at 12,254.35. So the takeaway really seems to be profit booking, especially in those mid and small cap names.
That makes sense. After a strong run, you often see investors deciding to, lock in some gains. It's quite typical market behavior, actually. Not necessarily a bad sign long term.
Good point, like catching your breath after a climb. Now, quickly on bonds and currency.
Sure, what's happening there?
India's 10-year bond yield, pretty stable actually, held steady around 6.453%.
Okay, stability there is interesting. Maybe the market's digested rate expectations for now.
Could be. And the rupee. Slight move against the U.S. dollar. Closed at 85.3780, so a minor depreciation.
Right. A small dip, always influenced by global flows and sentiment, that one. Worth keeping an eye on, but maybe not the main story today.
Definitely not the main story. Okay, let's move on to the big financial and economic news-making waves.
All right, hit me with the headlines.
First up, this is huge. Reports suggest Apple might shift all its U.S.-bound iPhone assembly to India, possibly as early as next year, moving away from China.
Wow, all of it. That's massive. If that actually happens, the impact on India's manufacturing sector could be, transformative.
Absolutely. Think about jobs, FDI, supply chain. It's a really big signal, isn't it?
A huge signal of confidence. Reflects those shifting global dynamics we keep talking about.
Okay, now zooming out globally, world stocks seem to be heading for a second week of gains. And the U.S. dollar is strengthening too, partly on hints of tariff relief, apparently.
Interesting. So global sentiment looking a bit more positive, even as our market pulled back today.
Yeah, that divergence is noticeable, right?
It really is. It shows how local factors, like that profit booking we mentioned, can sometimes outweigh the global trend, at least in the short term. We're connected, but we also have our own rhythm.
Makes sense. Sticking with global, gold prices, pretty stable, around the $750 an ounce.
Yeah, gold's just kind of sitting tight, isn't it?
Yeah.
Investors probably weighing inflation data, central bank talk.
Yeah.
Wait-and-see mode.
Exactly. And crude oil slipped a bit. Brent around $78 a barrel. Seems like there's some worries about global demand softening.
Lower oil often hints at expectations of slower economic growth. But supply factors always play a part too, of course.
True. Now back home, some really positive news. Indian startups, they raised $500 million in funding this week.
Now that's fantastic. $500 million. Which sectors were hot?
Fintech and edtech were leading the charge, apparently. It's a great sign, right? Shows continued confidence in Indian innovation.
Absolutely. A very strong counterpoint to the market dip today. Shows that long-term investment thesis is still very much alive and kicking.
Definitely. And one last key point from the U.S. Fed. They've signaled a cautious approach to more rate hikes. Data dependent, they say.
The Fed's stance. Always crucial. A cautious Fed can be seen as, less of a headwind for global markets, including ours. It impacts borrowing costs, capital flows, everything, really.
Okay, so let's try and tie this all together. Market outlook and analysis time. The correction today, mainly profit booking in mid and small caps. What's the main advice for listeners, you think?
I'd say caution is probably wise right now. Focus on quality.
Mm.
Especially if you're in those mid and small cap spaces. Look for fundamentally strong companies. Don't just chase momentum.
Right, sound advice. The fundamentals matter, especially when things get choppy. You mentioned resilience, perhaps in tech and pharma.
Yeah, potentially. Tech often has those long-term growth drivers, digitalization, and pharma demand tends to be less tied to the economic cycle, more defensive.
Makes sense. And looking outwards, what global cues should we be watching closely?
Definitely keep an eye on U.S.-China trade talk. Any positive news there could lift sentiment. And of course, continue watching the Fed's signals on interest rates. That's always key.
And domestically, what are the triggers here in India?
Well, corporate earnings season is coming up. That'll be crucial. How are companies actually performing? And then the monsoon, always vital for the broader economy and sentiment.
Absolutely. Lots to track. Okay, before we wrap up, just want to share an exciting message from our partners at Audiocast Lab, especially for our Gujarati NRI listeners interested in Ahmedabad Real Estate. You have to check this out. Audiocast Lab just released a bonus episode of their Ahmedabad Real Estate Review podcast.
What's it about?
It's a deep dive into the Sakar Realty Fund AIF. It's this really innovative collaboration. Sakar, huge trusted name in Gujarat real estate, partnering with a major financial platform.
Ah, an AIF focused on Ahmedabad. Sounds interesting for NRIs.
Exactly. It's designed to unlock amazing real estate opportunities there, specifically tailored for NRIs. Seriously, if you want the inside scoop on how this could be a game changer for your investments back home, you need to listen.
So how do people find it?
Just search Ahmedabad Real Estate Review on your podcast app. Hit subscribe. Don't miss out on these insights. Could be really valuable for your portfolio.
Okay.
Bringing it back for our closing summary. Today really highlighted diversification, didn't it?
It absolutely did. And the need for that long-term perspective. Markets will have days like this.
For sure. So stay informed, everyone. Keep learning. And remember, if you're unsure, talking to a qualified financial advisor is never a bad idea.
Well said. And perhaps we can leave you with our quote of the day. This one's from the legendary Peter Lynch.
Oh, love Peter Lynch quotes. Go on.
He said, "Know what you own and know why you own it."
Simple, powerful, perfect advice for any investor, really.
Couldn't agree more.
All right. If you found this brief helpful today, please do hit that subscribe button on your podcast app so you get our daily updates. We'd really appreciate it.
And if you have questions or want to discuss anything further, feel free to connect with the team at SOS FinWell over on LinkedIn.
We're always happy to chat. Just one final, very important note from us.
Yes, please remember all the information shared today is purely for informational purposes. It's not financial advice.
Definitely not. Always do your own research. Or better yet, consult with a qualified financial advisor before making any investment decisions. Stay safe and stay informed.